Yeah, yeah. Do you remember that guy that we met on the on the boat? His name was Larry. Larry Goins.
Oh yeah, yeah. Oh God, he's huge. Yeah. Uh, so you took some training with Larry Goins. Oops. And he's talking to you about non-traditional ways to put deals together, which a ton of people on Walters and Quincy's, that's everybody's about creative ways to put deals together on that boat. Seems like. So you did some training with Larry Goins. That's awesome. And then you go, okay, so you've been flipping houses and doing really well. And then you
I've
go,
been
okay,
doing mostly buy and hold. I don't flip any houses.
oh, great. Okay, great. So you're buy and hold and getting creative. All right. So then, like, just okay. So tell the story of this particular deal and how it came down the pipeline. And if I can add any value or insight into what you got, I'd be happy to here.
Okay, so I made a lot of offers one day. This is kind of what the basis of his system is. And I mean, really, this basis of doing any deals, you just got to pump out a ton of offers.
Lots of offers,
Or
huh?
you're going to be settling for ones that not the best deals. So anyway, I found this person on Zillow, and they had been lowering their price. They started off at like they were asking 39.9. It was listed with the realtor.
Mm-hmm.
Then they dropped it to like 35, 29, 25, just the increments till it got down to like 19 or something. And I came in and I offered them like, I mean, it was sickening when I said it. I offered them $3,700.
Okay. So you
And she was
offered.
like, no, no. And I said, just tell the seller. And she calls me back an hour, like, hey, do you remember me? He said he'll do 6,500, and I was like, all right, deal.
Okay, countered at 6,500. I mean, yeah, it even made you sick to make such a low ball offer.
The first time I ever met Walter and Cindy, that's the one thing I learned from them is if your offers aren't making you sick to your stomach, they're not low enough.
That's awesome. All right, so you got it for 6,500. So then what's the deal here? So what's your play?
I put it out for seller financing for 35,000.
Okay, so with any no rehab?
Yep, no rehab as is. It's in decent condition. It's not beautiful. Like it's not the house I would live in.
Mm-hmm.
But for some people it's good enough. And I rent houses that are in a little bit better shape than that up here.
Mm-hmm.
So it's livable. It's not terrible. I mean, it just really needs paint and carpet, and I think there's a broken window in the kitchen.
So you put all cash down then, right? 6,500
Yeah.
all
Well, no, no,
cash.
I borrowed the cash
Okay,
also. I got
so
no money in the deal.
oh, okay. So you borrowed the money, and what are you paying your investor on this?
Well, I actually I pitched one of my buddies about it. Um, he's into venture capital, and he loved the idea of me getting a lot of these houses,
Mm-hmm.
and then a lot of notes and selling a large portfolio of notes like that.
Right.
He was like, let's just try it a few times and see how we can do it. I mean, because I was excited about it. I think it is a good system, and it's working well for me so far. 2/3 of the way into one deal, but
Yeah, yeah. Um, and so are you just paying him half the deal, or I mean,
yeah,
what's
that's
your
all I got to do is I got to pay him back what we started with, so that his cash gets made first. He makes his money back, so we're all in for like $7,300 with closing costs,
mm-hmm.
and the cost of me putting out a little bit of marketing were $7,300.
Right.
So he gets his 7,300 back, and then we split everything over the top of that.
Okay, great. It's a true JV partner. So
Yep.
his money out, you split the cash flow. That's awesome. And Zach, just for a little bit of background, I mean, you're a young guy. I think this is really inspiring. Can you give me just a super short walnut So I was like, what are you doing and what were you doing before and all that. I mean, you're a buy and hold guy. You're not even 30 yet, are you?
No, I'm 23.
He's 23. you're yeah, like my youngest kid. So, but yeah, I mean, so how did you get involved in just starting to? You were doing some wholesaling or something. I remember from your story when we were at Jim's mastermind the other at Tom Olson's.
Yeah, I was yeah, before I was in real estate, I was in college and I was a writer or something. And I said I read Rich Dad Poor Dad and I was like, I'm not I was making 30 bucks an hour, so that was good for college, but I was like, this is still work. I don't want to be doing any work. That's the goal of everything I do is to try to do as little as possible. Or at least do all the hard work now so I can do less and less later.
Right, right. So the freedom
I was actually
lifestyle.
telling one of my buddies that came and visited me for Thanksgiving about this whole thing that I'm doing with my virtual assistants, and he thought I was an absolute nut. Like it didn't make any sense.
Didn't at all, huh?
Yeah.
That's fabulous. So that's really inspiring. So I'm really glad that you will let me record this and share it with people. All right, so you're gonna sell it. So they were dropping the price. Why do you think they didn't get somebody else to buy it? Just because they started down that spiral? I mean, really, do you think what do you think it is worth? I know it's worth 35 if you're gonna carry, but what if you turned it around for cash? What do you think someone would pay for it?
I don't know. It's kind of one of those markets where I don't, so the price range is so low. I don't know if the banks loan in that kind of price range, like a loan less than 50,000.
Right, like another investor probably as a rental is what I'm guessing is like a buyer for this generally, or
Yeah, that's what I was making the marketing to.
uh-huh.
But then the people so I've had three people put in applications so far.
Mm-hmm.
Actually, two. I'm waiting on another one. And they have both been people that wanted to live there. I haven't had any investors call me actually
Okay, so
about.
basically, owner will carry advertising, and you've had three responses. Three people fill out applications,
Three
right?
responses. So
Oh,
in the
responses.
last, I put the marketing out on last Saturday, not this one, but the previous one. And then
So
I
10
realized I
days or
had in the
so.
wrong Craigslist for down there because I was like, man, only two people have called me. I put it in the right Craigslist.
Uh
I
huh.
had 50 people call me last week, Dawn, and my phone is still blowing up. Like everybody wants to see this house. They love the idea of the financing.
Yeah. So, and does it seem like you're getting qualified people that have some down payment?
Well, so I'm asking for part of this course is to ask for a little bit less in down payment. Like, so I told everybody I was asking for 1,000 to 3,000 down.
Mm-hmm.
And the best person I've got right now gets they have 1,500 to put down.
Okay. So, and you're asked. So that's your best one so far.
Yeah.
All right. Just so I'm gonna just bring people along here. Let me pull up the calculator. So just so so when Larry's teaching low down payment, what is his thinking on that? Because from a traditional note creation, you're always trying to get the highest you can. But what is Larry's perspective on that?
I think it's just that a lot of these people don't down there, they don't have that kind of cash.
Right,
Like
they just don't have it. Yeah.
it's just that kind of area where they have a low medium income. Like I think their average I have all these stats somewhere, but their average like, income per month is something like it's like 25 to 35,000. I mean per year, 25 to 35,000.
Mm-hmm.
It's a I wouldn't say it's a depressed area. It's just they don't make a lot of money down there.
Right. So 35,000. You got someone who's got 15. Basically, well, what would this property rent for? I mean, just like for a benchmark.
I went to Rent a Meter and I found out that three bedrooms around there I think they were renting for like it was like $667 a month or something like that.
So basically, 1,500 is first, last, and security deposit. Not even, right?
Yeah, yeah, you're right. I didn't
So
think about it that
so
way.
basically they're getting ownership for rent. So how are you protecting yourself? Because if you have to foreclose on these people, it ends up being a loser. So what's your deal structure here?
Well, that's true. Like, I mean, like I said, everything's gone smooth the first two-thirds of the way. I didn't. I guess this is why I called you because I want to make a valuable note, and I know that if I did it by myself, it might not be
No,
as
I
valuable.
no no. I'm and please, there's no judgment here. I'm just asking, just because, uh, just wondering, because if you ended up, and I totally get, lowering the underwriting, it's just gonna potentially cost you down the road. And in fact, I was telling Larry this when, on the boat, and I said, I've got a small portfolio of this kind of paper, and when they're putting, if they're putting to 5 to 10% down, that green paper, so far in my experience, 20% of the time, 1 out of 5 times, maybe almost a little bit more, they're going to have trouble inside that first year. So I had to have the guy, go. I said, hey, Mike, you got to go back and figure out what's happening. They're going to quit making their payment. So go take it back from them and sell it again. We'll work together. And now we got our second one on the plate. So I would say that anyway, so 20 to 25% of this kind of paper goes bad inside of the first year.
Really?
Yeah. So if you have to foreclose, it's like, well, okay, in that state, how much is it going to cost and how long will it take for me to get
We're
possession
in my
back?
state, actually.
Huh?
We're in my state,
Yeah,
actually.
yeah. Well, cool. So whatever that number is for your state, it's part of the equation, of the risk. What happens if they quit paying? Doesn't mean that they're bad people, but life happens. So what happens if one of them loses their job? Someone has a health issue, uh, whatever. Someone gets thrown in jail. I've had that happen before, where they would pay their mortgage, but they can't. They're locked up. So, anyhow, so just something to think about. Not saying it's wrong. I mean, in this, the first thing that comes to my mind is throw the thing in a trust, or do a lease option kind of a thing, because just from the underwriting standpoint, because you're not putting them on title, so that if you're going to end up having a problem, you don't have to foreclose, because it's more expensive and longer usually than an eviction. So just something to think about. But if you want to be able to cash out, then you're pretty much looking at a note. So, but if you're going to get a note, have a note that you want to sell, just the general guidelines, and nothing is, and I know Larry has no problem selling his portfolio of paper to some larger buyers that, even if they take a little bit of loss on one thing, it's in general way better than their stock market exposure, things like that. So, I'm only speaking from my experience as a small operator, mom and pop kind of thing. But usually you're looking for 10% if you can. So if you could get someone with 3,500, you'd be golden. The closer you can get to that, the better. Just because, number one, it makes their overall payment less, and number two, they've got so much skin in the game that they, it's going to something really got to go wrong for them to walk away. And especially if they can't rent, if rent's more expensive than their mortgage payment. So if you stack all those things up, you're really putting all the pressure towards the win-win for everyone.
Okay.
So anyway, does that make sense?
Yeah, I mean, that definitely makes sense. I mean, you can't really walk away from that much money if it means that much to them.
Right. So, but let's just go with what you're thinking. What the most down payment you've gotten so far is basically 2 months rent. But it looks like 4% down payment. That's basically like they're getting a FHA loan from a private party, practically. Right.
Yeah.
So that underwriting is generally only done by government institutions who pass on their losses to taxpayers and things. So generally, unless there's other extenuating circumstances, like, well, you're not putting them on title, you're not, so that if they default, you're not looking at a long or expensive process to regain possession. Anyhow, or if you put it in a trust, like what Walter and other guys do all the time, And also, there's another guy that's been a friend of mine for a long time and actually taught me about land trusts. He does this stuff all the time. But so he puts the property in a trust, and then he sells the beneficial interest in the trust on an installment basis. But you don't have, it's not a real property. They're buying the beneficial interest in the trust. So, and then they have a lease agreement. They got a lease option inside the trust. That way, if they quit paying, they just can't exercise their option to buy the trust. But his attorney, the trustee, and they can simply evict the people and take possession. Whereas if someone disappears on them, like they do in the middle of the night sometimes, it would take him a long time to try to track them down, and a very torturous, foreclosure process. If you can't even find the people, they just disappeared, something like that. But the only thing with that is it's harder to sell out, right? So it's a lot easier to sell a note in a deed of trust or a note in a mortgage because there's a lot of grooves in the sand, right? There's a lot of people, everybody knows how that works. You can sell like the beneficial interest in the trust, but you like I might still come say, hey, I think you better put this thing in a trust, and I'll tell you what, I'll buy the beneficial interest in the trust subject to the lease option with that tenant, right? But I got to, number one, I got to trust you that and that your paperwork was put together well, and I got to trust the trustee, because whoever you pick could make my life heaven or hell. Does that make sense?
Yeah, there's a lot of moving pieces.
Yeah, there's more moving pieces, and
a regular person to wrap their head around that.
Right. So that's the problem. If you need liquidity, that's where the hang up is with the trust. If you don't need liquidity and you're just holding this thing for cash flow, boy, I would really, so it's just one or the other. But with a note, selling a note, number one, you've got a couple like this. It's a problem because number one, you don't have much seasoning. Like if you try to do it right away, which is possible, but we don't, until they get a year's worth of seasoning and they've paid on time for 12 months, it's not really considered seasoning in the traditional where the note business has always been for years and years and years. So you got small down payment means higher risk, and a small note also means that it's a lot of paperwork for someone. Usually the discounts have to be steeper in order to make it worth the time to do the deal, so maybe on a $500,000 deal, someone can be happy with this yield at 10-11% all day long, whereas the smaller the deal, just to make it worth it, by the time you got a minimum flat fee going, it might look like the investor is getting until you build up your own, just saying, the smaller the deal, the higher the discount, just to usually put the deal together, because there's some companies that won't even buy something that's too small. But anyway, I'm just throwing out a lot of, setting the stage for the thinking. So, but on this one, like if I was coming in and I know you and I trust you, so that's really important. So number one, what I want to know is you haven't knowingly sold this person a piece of crap. And they're going to get in there, and 4 months down the road, they're going to find that they have a major problem and they can't afford to fix it, so they just move out. Right? They just quit paying. So number one, I want to know that you aren't knowingly putting them in a situation that's going to be a nasty surprise for them, which I trust that. And I want to know that you put the best possible buyer that you could, given what's available. And then if you have done that, then, the better you do that, the more you're rewarded with the value you get out of the paper asset when you go to sell all or a piece of that. Does that make sense so far? Right? Yeah. So, like if you put someone in here that's like, oh, let's just say there was a loan product, and maybe there is, or maybe there isn't, because I don't keep a really tight pulse on conventional financing. But, if you put someone in there that was just like 6 months shy of getting a loan, well, then you did a really good favor. So in my mind, if I bought this note and it refinanced, I'd pop you back half the discount because you deserve it. Like I have to have a discount to keep myself safe from a underwriting perspective. My investment to value has to be somewhere in the probably on this 50 to 65 cents on the actual as is value, which is kind of hard to determine with this kind of price point and things, because the value right now, what you're adding is the financing. That's where you're really adding value, right? It's kind of hard to tell what the cash value is. But anyway, that's just the thinking. Like, how do we balance risk and reward? Because I have a high probability that this deal, if I'm thinking of buying this from you, Zach, I got to think, well, this is a really high probability that there's going to be a headache, and it's a lot, it's not a huge amount of money. It's a small note. So, gosh, it's got to be worth the time to put the paperwork together and do the deal. And because I'm a player like you are, I'm a rainmaker. It's like, okay, I got to make my spread. And so I would be more of an expensive version, and as compared to like someone that you brought along and cultivated them to be your private money partners, like you did with your JV guy. If the more you cultivate your network to say, hey, get people that are excited about 7, 8, 9%, and a lot of people will be, and then teach them how they can feel comfortable about it, and then you'll do a lot better, right? Than someone like me who, hey, gosh, I make money leveraging other people's money. I have some of my own that I work, but a lot of my money that I work with is financial friends. So in general, I can work in a lot of ways that other buyers can't, especially the larger institutions, but sometimes they can pay more, right? Because they're looking to put millions of dollars to work at any given time. They just have deeper pockets, they lower yield requirements, and they're just hungrier for it. Like pensions, they've got to get their money working. They've really got to keep it working. So, any questions so far?
I guess the thought that's running through my head the most is, what do we got to do to make sure that, what do I got to do to find the best buyer that's possible? Maybe I don't take the 1,500 down.
Well, you might take it, but I mean, if that's the best you can do, maybe you will, or maybe you won't. I mean, but I'm just giving you benchmarks. If 10% would be 3,500, and that's kind of what you're shooting for. More is always better. The more the better. That is one of the most powerful things to make a note worth something, is the hard equity that someone brings in at the front end. And I know a lot of people are having a hard time putting cash together. But on the other hand, I've seen people who put 40, 60, sometimes 75% down sometimes. Just depends. So they can be out there. I think it's not super common. But so just the most you can get, given the circumstances, for a down payment. Also, then what are you thinking about in terms of interest rate? What's Larry teaching you on that?
Well, I know Larry was lending at 9.5.
Right.
I know he was lending at 11. He was lending at 11. I was thinking 9.5.
Yeah. I know he can probably get away with that, and usury may allow that, but just in my thinking, keep staying below. So with Dodd-Frank and just trying to comply with safe harbor.
When you made this course also, it was prior to Dodd-Frank, is what I realized.
Well, right. And it doesn't mean it's wrong. It's just that you don't want to look like you're a predatory lender or you're setting people up for failure. So just where I'm at in my thinking and other people's thinking that we've come to this, it's just stay under 10, stay under 10. It just makes you look good. Like, just think if I was sitting in front of a judge and some contingency fee lawyer had me sitting there, would it look like I was trying to do a good thing, or would it look like I'm preying upon, people who want the American dream and, taking tons, no, taking their money, setting up for failure, kicking them out, taking the next person's money, setting up for failure, kicking them out. You know what I'm saying? You're just trying to.
Right, I don't want to do that. I
Right.
don't want
No,
to do it.
most people don't. It's just, as always, the few people that were like that, and namely, it's the big corporations and the financial elite. They're the biggest criminals, really. But there are a few small operators that have been a little bit predatory. I'm just talking out loud for the benefit of, I guess, hearing myself speak. But anyway, just thinking, I'm trying to share. So then now, if this would rent for $675, you said.
Yeah, it's questionable, but I think 3 bedrooms over there. I mean, it's a pretty big 3 bedroom, 2 bathroom house. I saw some that were up there 750, some 700, some 650. I figured 675, 700 is about right.
Okay, so then
It might almost be way below rent with taxes and insurance, though. Also,
right? So what are taxes and insurance on a monthly basis? Just to throw it out a number that's close.
I think taxes will probably be. I think it'll probably be $40 a month for taxes,
Okay,
and it will be about the same price for insurance.
so basically $80 a month.
Yeah, I'm just been estimating 100, but that's more realistic, about 80.
Okay, great. Well, then let's just call it. They've got $595. I mean, they could still be, you know, at basically rent. It's better because tax treatment and all that. But really, in that case, they technically have $595 that they could apply to principal and interest. Correct?
Right.
So then here's how so what we put in, 35,000 minus the down payment is giving us this number here, right? Our PV, principal value. We're going to put an interest rate that's aggressive. It's fair. This is a very fair private money rate for someone who isn't financeable. It's very fair, and it's affordable in this price range for people. Next, we figured out what does this thing rent for minus taxes and insurance, and what potentially could they afford. It doesn't mean it's going to be this high, but we're trying to figure out what's a really likely number, because then, so now we know these things, and now and future value is going to stay at 0. You could leave it empty because we wouldn't put a balloon in here. You could. Dodd-Frank doesn't like them if you're going to do more than, I think it's one a year. You have to check your state. They might have variations, but in general, if someone's just going to do one a year, they can put a balloon in there. But generally, that sets up a homeowner for failure, because what are they going to do? Do they have a reasonable chance for refinancing, or are they planning to sell?
Right, how are they going to get that money?
Yeah, so you don't. So usually, general rule of thumb is we don't want a balloon. If you could put it in and it was reasonable that the seller or the homeowner had a good chance of hitting that balloon payment, then that's fine. But most don't, right? So,
You ever use a step instead?
pardon?
A step.
Yeah,
Like
you could
make it
totally,
cost more?
yep, you could do a step up payment where
Yeah.
every year or two, or whatever you set up, it goes up a little bit more, so they are more aggressively paying it down. That's perfectly legitimate also. So there's a ton of variations that you could do based on. For instance, I was just working with a guy who actually, he's paying on a note, and he's very wealthy, but very well to do, but a lot of his money comes cyclically, not like consistently every month. So he set himself up for not very big monthly payments, but a couple times a year where he's making large partial balloon payments, because that's when the bulk of his capital comes in certain times of year. So there's all sorts of things you can do to make a win-win here. But just for the purposes of starting off, and I'm trying to hopefully give you something you can put your teeth into. Well, then what I figure is, well, how do I make this even? Is it, I can go 72. If I say, oh, he can own this free and clear in 72 months, and the payment will be a little bit higher, or I could cut him a break, leave him a little money for repairs each month. And that's really nice and aggressive. In 84 months, he can fully amortize. So going back to the things that make a note more valuable is just think of more money sooner is better in terms of preserving the future value of those payments. So the more money you get down now makes it safer. Then you want the highest interest rate they can afford and will agree to. Then you want to take what they can afford, and you want to be able to afford it, but you want to amortize over the shortest possible time period generally, because that's worth more. So let's just run for example. So if I'm only looking at yield and none of the other things like my maximum investment to value or whatever, what I would be doing is going, okay, what if I needed a 15% yield and this had 84 payments to go of 554.41 and I need 15? What am I going to pay for that note? 28,730. Okay, what if I go back to this 9.9 and let me put a regular 30-year note in there? It's cheaper payments. Now what will I pay? I'm just curious. I don't know. If I need a 15% yield there, well, now I will pay $5,000 less or something for that note, right? You can see that moving the amortization up increases the present value of that note. What if it was at 180? Yeah, see, you can kind of see the shorter the amortization, every few years there makes a big difference. So just from a yield calculation, there's obviously more that goes in it. So you try to take what they can afford and push it to the shortest amortization that you can, if you know that you're selling the note off. So then basically, if you guys are all in at 73, what's your perfect picture? You get back your buddy's money, and then you split the cash flow. Now let's just see if you didn't. Let's just see if you just left your money in. I'm kind of curious. So what were you thinking? What do you think most people can afford? What would you be leaning toward? Do you think people would be going for that aggressive 7-year amortization?
I think go for 120.
120?
Yep.
Okay.
No, that's just what Larry taught me, though. I mean, because this is what I advertised in all my advertising too. Is 33.5 at 9.5% interest and 120 payments. I think it comes up to like 413.
Okay, super affordable for people. So then we got that. Does that look right?
833. Okay, yeah, that's right.
Okay, so then basically, if I'm my first thing, that I would do would be, and I'm gonna just go back. Basically, okay, what's my max ITV or investment to value? Because if I bought this note, I'm not making a loan, and I would call it loan to value in that case, but I'm making an investment, buying a note. So basically, let's say that I'm going to be at, I don't know, I'm going to pull out a number, like 60% on this. So then I'm going to do, and assuming it is worth this, times 0.6, and what am I going to get? 35,000. What if I want to stay at 60% just because of this kind of paper? So here's the most I can bring to the table is 21,000. But if you were going to keep it, so here's what I don't know. You're going to get this money. So you're in it for 7,300. So basically, you are going to do so much better than someone else even buying this. But let's say, then what's your, like, you guys have like a 71%, return on investment, but it's even better when it's infinity return, right? So if let's just work this out. Like, okay, if 21,000 is the most I can bring to the table, and I'm just throwing in 15 just for the sake of keeping things consistent. I wonder how many payments I would need. So call it 75 payments. So then, just to get your money out, you're going to give away most of the notes. You would have what, 120 minus 75 is going to be what? 40. Well, you're still going to have 45 payments count, but you're going to have to wait 6 years or so, right? But 45 times 433, you still got 19,000 coming to you down the road.
It's not bad.
Isn't that good?
Yeah.
Yeah. Or what if you did this? I mean, just for the purposes, what if you just got your money out? Let's just call it 8,000. If I gave you 8,000, and let's say I even need a 25% return, just for the hell of it, I only need 2 years worth of payments. And then how many do you have? 8 years left to you?
Right.
Right?
But I'd only get half the payments, that was the thing. So I'd get 215 per month.
Yeah, but here it is. That's infinity return because Zach has zero money in it. He's gonna get divided by 2. That's your half. I mean, this is just, you don't have to make a home run on everything, but if you step and repeat this, like your no work thing, live on an island or whatever you like to do, is like right there, right? And you have 8 years worth of payments coming. See, it's an error because it's just off the charts. You created passive income out of thin air with none of your own money in the deal. Now that's brilliant. And you're doing a real big favor to you guy who does have the cash but can't work the deals like you can, right? What a big favor for him. So he's getting his money out, and now he's got infinity return for, what's half of this times 96. Yeah, you each get 20 grand out of this deal with none of your own money left in it. So, I mean, gosh, that's not bad for a really teeny weeny little deal, right? I mean, and the numbers can be so, and I'm sure does Larry say the price point, your ideal price points are like up to 120 or something like that, or 150, or stay below 100, or what's?
All the homes that I offer on are listed for less than 30. So, I mean, this is just the ones I know how to do. I have some here in Richmond that I do rent to own with in a little bit higher price range. But those are a little bit, I paid a little bit more for those houses. They're a little bit nicer, and I don't want to give the title away to them, is essentially what I'm doing there.
Right. So,
but I feel like I have about the same amount of maintenance. It's just I get a check in my bank account on the first of the month.
Yeah.
Or in a few cases, I gotta go pick the check up.
Right. So, I mean, I would bet that you might have another buddy who you go, hey, dude, you want to make 25% on your money? You got 10,000 sitting in your bank. I don't even think they believe me. Yeah, like you'd have to offer less for them to actually take it. You know what I mean? They'll go, oh, it must be really risky. But like for me, like I would have to, like if I pick up my pencil and push the paperwork for less than, I mean, it used to be 2,500. I'm trying to up that. if I'm not going to make 5,000 doing something, plus a remainder interest and upside in it, like it's not starting to not be very good use of my time. But I think it's a great thing. Like these small notes, there's a lot of people that are hungry for these because they're just starting, they're just building those little self-directed IRA accounts, or they're scrambling to save their money and they don't want to put it in the bank. They want it to do something for them. So there's a lot of hunger. It's just that, it takes us, this, Zach, I mean, it takes as much paperwork to do a teeny deal as a larger deal where there's more potential dollars on the table. So, like when I'm doing, if I was to say, hey, and we can throw this out to my group, my owner financing community, and see if someone's got a little bit of money and they want to take a crack at it, because I feel comfortable with the operator, you, and I know if something goes sideways, you're not going to say, who cares, your problem. You got either a remainder interest or a relationship and a reputation to uphold. So that's why on this new kind of paper, where relatively low down payment and not a lot of seasoning, I like having the seller, the guy who sold me the note, keep a remainder interest, or just know that the kind of person they are, because I don't want to have to fly to wherever you are across the country to take care of a little deal like this, right? Not a good use of my time. You need the boots on the ground. So I like creating those partnerships. I know Larry likes to just sell. He can just sell out, take his discount, and he's out. And that's just the arrangement. And that's fine. And that works for a lot of people. For me, I don't have a big staff of people to chase problems. I like to keep my life simple. Or if I'm working hard, I want to know that there's a really big upside, not just, I made a couple $1,000 on that deal. It's going to take a lot of grief and time. So, but I think you're in a great position here. What haven't I done that you were hoping I would help you crunch numbers on? What else do you wonder about?
I wonder about having one of these folks move in as an owner occupant, and I've never even talked to a mortgage loan originator. I don't know how that works.
Mm-hmm. Well, do you have a relationship pre-existing with any no lenders?
No, never. I mean, the banks won't even lend to me now. I don't have tax returns. They laugh at me when I walk in. Like I have to borrow cash from people.
Yeah, well, I never
But
go to banks for loans either. So congratulations. If you're invisible, that's really, you're ahead of the game there. Um, so I guess what was the okay, so there's people that do loans all the time, traditional loans. So usually the most successful thing is just, if you know realtors, if anyone in the industry who does a lot of business, and kind of leverage those relationships to give it. And usually you'd have better luck with a small, not that Dodd-Frank has killed a lot of small to medium sized companies, mortgage companies, but if there was one independently owned, relatively small to medium sized company, you have a better chance of saying, hey, I know, you mostly do these other things, but hey, can we pay you? And I've heard prices anywhere from $400 to $1,500 to underwrite, the loan. In this case, if they have to pay $1,500, it doesn't make sense, because that's all they got for a down payment. But if you can get someone to underwrite that, and I would say, if you're going to do this routinely, you're going to have to figure out this piece of someone who can prove ability to pay and show. I mean, if you're only going to do one this year, or in the next 12
no,
months,
I want to do a lot.
right?
Like I
So
want to pump out a few of these a month, which is why I want to sell them. My
exactly,
goal is to create a machine that sells them, and to get passive income that way, as
right,
opposed to having it from the actual notes.
right. So then you got to figure out this piece, because you got to prove ability to pay, because if you're going to do a lot of these, you're going to be considered a loan originator, and you have to have a license. So basically, it's just like figuring out, negotiating a flat fee, and it works best with someone in your local market that you're leveraging pre-existing relationships, if not yours, somebody else in your group, who knows realtors, who knows lenders, traditional lenders, mortgage brokers, things like that. It's really tough for companies to do MLO services across a lot of state lines, because it's so horrible with all the licensing issues that they have to. It's very expensive for them to get licensed in every state. And so most of those guys haven't really pulled that off, as far as I know, that intended to. So it's, see if you can get someone to, just run these files through. Basically, what they're doing is putting their license on the line in order to say, hey, we're doing traditional underwriting. They'll run the ability to pay, the typical standard debt to income ratios, and say, yeah, this person qualifies, or no, this one doesn't. Here's what they would need to do to actually qualify for this mortgage payment, blah, blah, blah. So you got to figure out that piece somehow. And I don't have a quick answer for you on it.
I guess the answer would just be call around town. And
yeah, because Larry's got, I think he pitch a company who he uses or not.
I don't know. If he did, it would be in the same notebook that I'm writing this stuff in.
Yeah, so and I want to say he probably does have some references, but they're going to be, for this price point, they're going to be pretty expensive. I want to say they're going to be $750 to and up to underwrite a file. So just like with you're going to get the best deal when you cultivate your own money partners, you have to you're going to get the best deal if you cultivate your own relationship with a licensed mortgage originator, because the last thing you want is to get this whole machine in place, as you put it, and then because you get a target on your back because you're doing a lot of business, and people are going to go, hey, you want, like, you're good at staying off the radar, so be sure that you're staying off the radar. Now, that's the other thing I like about the trust, is it keeps you it puts another step, an obstacle between you and some contingency fee lawyer. But there again, then you have the liquidity problem on the other side. So I think if you guys are willing to keep, either to take less or to create some sort of partial arrangement where someone's coming in knowing that you're going to be behind anything that goes bad, in exchange for, hey, if it pays off in 2 months, I'll pop you back half the discount, you had to take to sell it to me. Something like that. That's what I think might be a really good win-win for you. But, all I can speak to you is as a small mom and pop operation. Then there's the larger ones. So sometimes they won't even touch notes this small. So you have to find that balance between, who's, if you want to shop around for institutional buyers, you just gotta, call around, like Google who's buying notes, and figure out what their parameters are, and then you'll kind of know what your options are for. And I wonder if Larry would let you know who he's selling to. But yeah, so does that help at all? What else? Zach?
This has helped a lot, but yeah. So there's 2 questions that I only wrote down three questions to ask you. And so this might sound silly, but after they put, a lot of people have been asking me this. So after they put down the down payment, the first payment doesn't start until the next month, right?
Correct. Right. Like rents are paid in advance, right? You pay December 1 for the rent of December. You put the down payment. Now you're borrowing, what's that number we said? 33.5. Now you're borrowing that, and you're going to pay interest on that after you've used it for a month. So if you close December 1, their first payment is always the month after. Or let's say you closed on the 29th tomorrow, or there's 2 days. Are you going to make the mortgage payment the 28th or 29th of each month? You could, but it's sort of awkward. So what I would do is say, your payment's going to be due January 1st, but you owe me 2 days of prepaid interest to bring it to 12/1. Okay. Because it's just easier and cleaner just to have really standard when the payment is due each month.
Oh yeah, I agree. I figured that out with my rentals, because like this week sucks for me because I have everything coming in at different days. Like some pay on the 1st, some the 7th, some the 4th.
Exactly.
So I'm collecting money all week next week. It's not a terrible thing to be doing, but it'd be nice if it was all one day.
Right. So then here's how I would figure that. It's like, okay, times 9.5, you said. So that's the interest they're going to pay for all year. So let's divide that by 365. They're going to owe you $872 per day. Like if you were doing, they close sometime in November, you want to prepay interest up to December 1. So the first payment's January 1.
So it'll be $17.
Yeah, well, and you can just walk away from it. Nobody cares. Or, this could, what if it was 15 days? What if you close mid-month? Well, heck, I mean, that'll buy you a couple donuts or something, won't
Yeah.
it? It's just the standard in the industry is like
Okay.
how the private money works, if you care. So, because you can make up whatever you agree to, right? I mean,
Right.
right. What else?
So let's say that I send these folks to the loan originator.
Mm-hmm.
First of all, they pay for that, right?
Well, that's what they should pay. So you got to have it affordable. It's like, it's not uncommon to say, "Hey, here's an application fee." But if
Okay.
it's too expensive, they're not going to have the money to even put down.
Right.
You can
Yeah,
roll
that's
you
true.
can roll
You
it.
don't have to. Yeah.
You can roll some closing costs into the loan if you wanted to, but there again you have your underwriting issues where it's already a low down payment.
And now, would the loan officer charge them if they don't qualify?
Mhm. Yep.
Okay.
A lot of times, I mean, I guess they better be pretty sure they can afford it. And that's gonna filter out a lot of people for you, where they've got enough of a down payment and they got money that they want it so bad that they're willing to, and you can choose to say, hey, you didn't qualify, let me find something for you to rent, and I'll credit you. I don't know, you could you could work something out, but I don't know, maybe you can get someone who says, hey, for $75 I'll do a quick check for you. But when it comes to fully underwriting the loan, that's a big process. That's a lot of paperwork for someone to do. So,
Okay.
and they should run credit too. So that's an out of pocket cost.
The loan officer runs credit for me. I don't have to do that.
Exactly. Mm-hmm.
What do you think a decent credit score would be for these people? I mean, because I can't expect them to have 800 credit down in this price range, but
No. I would guess you're in the 500 to 650 usually.
yeah, that's about what I'm hearing from these people is anywhere from 550 to 650.
Right. So what you're looking for is something that shows character, because a lot of people at various points in their life have upsets and resets and all that kind of stuff. But you're looking for a pattern of why what is it? Because they lost a job? Was there a medical issue? Was there a death? Was there a divorce? You're looking for things that, or just general patterns. I guess I'm not the biggest. I don't know how to explain what exactly makes a good credit score or not, but I'm always looking for if the story makes sense, and otherwise, does it look like they're a good risk? And then there's where, if you get enough of a down payment, you just don't even care that much unless they look really bad for some reason, or they got a criminal record or something like that, right? So, yeah, I don't care. That's why, like, if someone comes in with, let's say someone comes in with like $7,000, 20%. Like, I probably wouldn't even care what their credit is, because that is such a good down payment, especially considering, the neighborhood and things like that. And
Yeah.
I mean, I had a guy that I did a deal for here, and he wasn't financeable, but he had 30,000 cash saved up, and that was 30% down on a 100,000 house I sold him. I mean, that was excellent. I felt very secure. So,
Yeah, I mean, I just kind of worry about that because I understand that I'm meeting the people and I know the people, but to the person that I'm selling the note to, they are just numbers on a piece of paper.
exactly. So that's where, you're cultivating your relationships. You got to know, okay, before, and that's why you called me and we're doing this little meeting. It's like, okay, before I create the paper, I want to know if I'm going to be able to sell it, and at what price, and how much volume, will these people do? Because even if I, buy one of your notes or a couple of your notes, I'm not going to buy probably 100. in a year, like
Right.
me personally. So you're gonna have to go, how much paper am I gonna sell? How much am you guys? If you guys just keep it, you're already making 70+% on your money. So sometimes you might decide to keep it. But if you're doing a ton of it, I mean, and maybe you'll get more JV partners. You're gonna probably just attract more people that want a piece of what you're doing, and the numbers will just get better and better for you. But I would call around to some of the larger buyers. Like there's multiple ones, but I think like Fanac is a large buyer. I'm sure there's other funds. There's a lot of private parties too that you're not going to find on a Google search. But just for a benchmark, I would call some of these larger note buyers that are the end buyers, not brokers, and just figure out if they'll even look at this product, and if so, because what they're going to do is they're number one, they go, even if they'll do this size of deal, they're going to go, okay, you're selling it for 35, but wait, you bought it for 6,500, so how are you telling me it's worth 3,500? They're going to have a problem with their BPO, because most of the larger companies are going to say, just order their appraisal, order their BPO, broker price opinion, and they're going to base the purchase on that. So it's really tough for them to come in and give you 20 grand when you bought it for 6,500. So instead of it being an investment to value of 60%, they're looking at a 200%, 300, whatever, 400%, like way upside down from the get-go. I mean, that's just what it
Yes.
looks like, right?
Right.
So then that's where the relationships come in, because that's where maybe you can't just strictly on a spreadsheet. It might not look as good until people understand your character, your intent, and your ability to come back to the table if something goes sideways. I mean, I love my guy back there. It's like something goes wrong, I call him, he goes and takes care of it. Not only because he respects our relationship, but he also has a back end in the note to protect.
Okay.
So when you get financials and relationships and character all lined up, you can put deals together that just black and white might not make sense, right?
Right. Okay. I see.
But I think this is super powerful. I don't know what I'm hoping I gave you some value here, and I want to make sure before we wrap this up. Not like you can't ever call me or email me again, but just for now, is there anything else left kind of spinning around in your head that you wish we would go over or revisit?
I mean, we definitely opened up my mind a lot to what I need to do in terms of, I mean, basically qualifying these buyers in this price range based off of a down payment, because that is the most important thing
Yeah,
down
that
here. Sounds like.
yeah, if you can, but if you just can't pull it together, that's why they're taking 5% down. Like the guy sold it for 99.9. He took $5,000 or $6,000 down. It's not like it's an insignificant amount of money, but like most working families, that's about what 5 to 10 is about what the max they can come up with. And
I
so
mean, the thing for me too is that, I'm not at a shortage of buyers right now. There's so many people calling me every day to go and view this property.
uh huh.
So I guess maybe when the phone calls stop, it'll be time to settle for one of those $1,500 down payments. But until then, I guess I can ride it out and try to get 10% out of somebody.
Yeah, I would see if you can. It'll help an awful lot because, like I said, the ones where my portfolio that I have of this kind of paper, generally it's a teeny bit higher price point. I would say more in the sales price of the house is more like 60 to 110. But you're just going to do a lot better in terms of minimizing the statistical likelihood of default and the cost and hassle of that scenario.
Okay. Okay. Yeah, I mean, I mean, like I said, that's the last thing I want to deal with. I just want The cash coming in. I don't want people calling me.
Yeah, and the interesting thing
You
is
have
that,
to call people.
yeah, because I mean, that's the, one of the things historically I loved about the note business and these loans and things is that it's a lot less intensive than property management in general. But what I've been struggling with, or just getting becoming greatly aware of, is that I've got a fairly sizable portfolio now, and even with a mostly performing portfolio, you're going to have a certain percentage that's going bad or whatever. And so it takes a lot of time. It takes more time than you would think just to have mailbox money sometimes. There's a lot more moving pieces with than, so once you get a number of these, it's a job. It's a job just to manage a 90% perfectly performing portfolio because there's always something. There's always something coming up. And then every now and then I buy a little private non-performing note, and then, you're dealing with foreclosures and workouts, and gosh, there's a lot of little paperworks that need to be done, and this needs to be notarized and FedExed by this, you can see what I'm saying. It sounds really simple, but it can be a bigger job than you realize. So as you grow, you want to make sure you're getting your pieces in place for, well, then who's servicing these? And am I going to hire someone, or, am I going to get someone to do it? You can get these licensed servicers at very cheap, sometimes like $8 to $10 a month. They'll take care of this, keep you compliant from the regulatory standpoint, and keep your life manageable. But there's other parts that come with that. Okay, you don't have to service it, but a lot of times they don't have a mechanism for letting you know unless you notice and are keeping track of, wait, I haven't gotten a payment in 2 months from this one note. And you call them and they go, oh yeah, we've been sending out late notices. Yeah, well, did you think of telling me that this note wasn't performing? No, that's not our job. We don't do that. The ones that are in the $8 to $15 a month for servicing. So just sort of a heads up, something to think about, that if you want to really keep your life simple, you need servicing, but then you're going to have to keep track of it too. You're going to have to know when you didn't get paid. And sometimes those services, aren't set up to let you know, hey, by the way, did you notice we didn't deposit in your account for this one? No, they're not going to do that. They're too busy.
Well, like I said, it sounds like I got a lot of stuff to learn.
Yeah, and I hope I didn't discourage you because I'm really excited for you. This is a really, really powerful model. And the best thing to do is just get the first one under your belt. Do the best you can and just keep learning and adjusting and modifying and improving. But you're not going to go in, with your eyes closed. You want to go in with your eyes wide open. But that's what I did. As I was building a portfolio, it's like, you just got to start somewhere. And guess what? Whatever seminars you need, you're going to get. So, but overall, the best thing I ever did was, quit trying to flip for a buck or broker, but to build the portfolio and build my private financial partners. Best thing I ever did. Best thing. And you're really, really well on your way just with what you're already going to do with this first deal. So,
well, I appreciate that, Don.
Yeah, I'm excited for you, and hope you have. Are you going to the Virgin Gyms deal in Norfolk? I guess you're right
No,
there. No,
yeah, I'm not going to be there this time. Actually, are you?
no. I'm going to be in Austin this starting tomorrow, and that's about all the traveling I can do for the holiday season. So
Are you going to the IRA mixer? I believe I got an email.
It's in Austin at remember, did you meet Casey Jackson?
Yeah.
Okay, it's something at his ranch. It's a little spontaneous mastermind he threw together.
Okay.
And then he invited. It only accommodates a few people. I don't know, 18 people or something. I don't know. So I just thought, okay, I'm only gonna go one other place for the last half of the year or the last third of the year, and okay, I'll pick that one. It sounds fun. A ranch, maybe I get to ride a horse or something like that. So But anyway, yeah, if you have any follow-up questions, don't hesitate to call or email me, and I'm really happy to help you out. And I'm glad I met you through Jim's group.